Hello, good morning, ladies and gentlemen. How are you doing today? If you good morning, ladies and gentlemen. If you can hear me clearly and you can see my screen, kindly confirm this by typing hi in the comment section so that we can be on the same page. I want to confirm that we are all on the same page here. So please do type in hi in the comment section so that we can get this session started. Okay, so what's happening in the chat? Oh, great. Thank you very much, Carrie. Good morning. Hashitaka, good morning. Thank you for the confirmation. TransX, good morning. Thanks. 959087 Chilio Perez 86. Hi, thank you. All right. So let's see this as a confirmation that we're all on the same page. So we get the session started. Okay. So I want to welcome you all to yet another promising session of Extra Speed Live, hosted by my humble self, Sheriff Daramola. In the next 60 minutes, I will be taking you on a trading journey where we shall be evaluating the financial market using various technical parameters to identify trading opportunities lining up for us in the New York session today. It's also important I make mention that we also have some pairs we are actually monitoring. We were able to do some pairs yesterday, I think like 5 to 6 pairs yesterday. And the first thing we'll be doing this morning is to go through those pairs and see how well they are doing. And if we have any updates or follow-up details in that regard, I will be sharing it during the course of the session. So I would advise that you stay tuned in through to the end of the session so that you don't miss out on any updates or advices I will be dishing out during the session. If you have any pair you want us to look at, feel free to drop it in the comment section and I will try as much as possible to inculcate it into my plans for today. So once again, welcome again and thank you for being around. So let's dive into the chat and let's see what's happening. So I will be taking some time to look through this chart. If there are any pairs or commodity you want us to look at, just drop it in the comment section like I said earlier. So let's move into the chart and let's see what is happening. So as usual, the first pair we are going to be looking at this morning is the US oil, and let's see what has been happening. Well, the US oil has been doing very well since yesterday. It has been going as planned, and as you can see, remember we had two parameters that is going to be guiding our actions, and the first parameter is the bullish trend line we were able to identify on the 1 hour time frame, which is illustrated on the chart with the purple line. So we have this bullish trend line, and we projected that this bullish trend line will guide our action during this week. And then the second parameter we have is the $86.50 level. So we said we want to see price continue to rally right above that level for us to be comfortable in the bullish momentum. And what do we have here? Since yesterday we have seen our price has consistently found higher highs and higher lows. So we can see how price has moved. And like I said yesterday, I told you that if you had missed this move from this point here yesterday, then we want to be waiting to see a retest of structure. It could be a retest of this bearish trend line, or probably price respect this bullish trend line one more time. Then you could join the rally to the upside. And price has moved as expected, and presently we will be in profit. And right now I'm in about 200 pips in profit at this point in time. I don't know what you are right now, but one thing I'll be advising yours to do at this point is to lock in our profit here. So you can either move your stop loss to break even to protect your position against any sudden pullback that might happen, or you could lock in some profit right around above the $87.50, which will be dovetailing to about 90 pips from my hand here. So now that we have done that, we have moved our stop loss to break even. What is going to be our plans for the New York session today? Well, before we go into that, the first thing I want to be doing is to go to the daily time frame, where we want to be having an holistic perspective of what is actually going on in the market. And this is meant for those who are not part of the session yesterday, so that you can be on the same page with us, so that you can also know how we got to this point we are right now. Now, what I'll be doing now is to scale up into the daily time frame and let us see what has been happening in the last 2 years. Now, on the daily time frame, like I said yesterday, we are on a very strong bullish momentum in the last 2 years, as we can see how price has consistently found higher highs and higher lows. And as a result of that, we were able to connect the series of higher lows here to give us the results and bullish trend line that we have been using to guide our action recently. So now we can see how price has respected this area. We had the result and bullish trend line, and which took price since the beginning of the year right into the 129.50 area, and since then we saw a retracement phase back into the bullish trend line here. And if we look at the structure we have here, we can see that in the last 6 to 7 weeks, we can see our price consistently rejected that bullish trend line to give us a clue of a possible bullish momentum that could be happening from that point. However, something interesting happened during the later part of the month of August stroke the early days of this month, that is September. I want to zoom in so that we can see what I'm talking about very well. So we can see what happened during the later part of August stroke the month of September. We saw a final breakdown of that bullish trend line, which is something very, very significant, because we all understand from what I explained so far that that bullish trend line has been holding price action to the upside. But now, during the course of the month of August, the last days of the month of August stroke the month of September, we saw the breakdown retest of that structure, giving us a clue into a possible bearish momentum that is likely going to be taking over from this market. And from a technical standpoint, whenever we see a breakdown or breakout of structure like this, the next thing we expect is that price is likely going to come back and do a retest of that structure with the intention of giving us a confirmation of a trend continuation to the downside. So these are one of the scenarios we want to be looking at this week, and we said, okay, fine, if we have this kind of scenario, is price going to go back into this bullish trend line? Let's see if that is going to happen. That is, price comes back into that bullish trend line to send price going to the downside, or we could be having an outright breakout of that structure with the retest giving us a further confirmation of a trend continuation to the upside. So during our live session yesterday, we were around this point and we said, okay, fine, let's see how price is going to relate with this resistance point of the descending channel we were able to identify on the daily time frame. So you can see we had this descending channel that has been respected since the later part of the month of August. We saw how price consistently respected that descending channel, though we had a false breakouts in the later part of August, and since September started, we saw how price has consistently respected that channel. So we were looking at this area yesterday where we were saying, are we going to be seeing a rejection of that level with the intention that price is going to continue to respect that channel, or we are going to be waiting for a breakout of that area to give us a confirmation to join the rally to the upside. So now with this information we had here, we were able to scale down to the lower time frame. But before I do, I also want to let you know that we identified a key level at the $85 mark, and this is what we have here. And the reason why we had that key level, let me show you why that is. We can see that The level has been a major determinant of price action in the past. The last time price rejected that level by the sellers was in the month of October stroke November last year. We saw multiple rejection of this level, giving us a clue into selling potential from that area. Price came down into the bullish trend line and we witnessed a breakout retest of the structure during the early months of this year, and then price came back into that structure this month. So in a year after, we saw price coming back into the key level at $85 mark, though we saw the breakdown of that structure. So we don't know if this breakdown is a false one at this point in time, because right now price is right above that $85 level. So now with this information we have here, so we scale down to a much lower time frame. So we scale down to the, let's see, the 1 hour time frame. Hold on a second. Okay, we have the 1 hour time frame here. We have the descending channel well identified. Now on the 1 hour time frame, during the course of yesterday's live session, we were able to identify this temporary bullish trend line, which is the purple line you can see on your screen after connecting the series of higher lows. And we were saying that this bear bullish trend line is going to be our guide for this week, as we expect price to consistently respect this bullish trend line going forward. And we also stated that if this bullish trend line becomes our parameter, our yardstick for this week, a breakdown of that bullish trend line is likely going to be giving us a signal of a possible bearish momentum happening from this point. But since yesterday, in the last 24 hours now, price is here to break down that bullish trend line, and in fact it has respected it one more time during the early hours of today to give us a possible trend continuation to the upside. So now, since the beginning of the week, we saw our price consolidated right between the $87 area and the $85 area before we saw the breakout of that structure. So if you missed this move, which I actually took this move from here, if you missed this move yesterday, then you would have likely joined the rally at the retest of the structure. So we had the retest of the structure. Remember, this is the resistant level of the descending channel we identified on the daily time frame. We saw a breakout of that level, and we saw multiple rejection. In fact, price came back, rejected that, retested that bullish trend line, and price has continued to the upside. So right now price is right around the $89 mark, which has a tendency of selling opportunity. As we can see, as soon as price got into this level during the New York session yesterday, we saw selling potential from there. So what we want to be doing going forward now is to identify that level. We can see how this area was being a selling niche for participants in the New York session yesterday, and right now we've been seeing multiple rejection of that area. So what I want to be doing now is to identify a level there, which we shall be using as our guide going into the New York session today. So what I'm doing right now is to bring out my line chart so we can have specific points of connection. So we have somewhere around here at the $88. Okay, where is that? Let me see. Let's see. I think $88.70. So let's label this. Let's give this a label for the sake of clarity. So we have this place, the $88.70 area. So we have that like this. So now going into the New York session today, this is going to be our guide. And for those who actually missed this move yesterday, we might be having another opportunity to join the rally to the upside. So if you had missed this move, let's see if the market is going to give us a second chance. Now, how do we intend to take advantage of that second chance when it finally happens? So, well, what we want to be looking forward to during the New York session today is an outright breakout of the $88.70. So if we have an outright breakout of the $88.70 area, remember, we are not going to be getting too excited at the sight of such a signal, as it could be a false one. So we want to wait for further confirmations to happen in the form of a retest of structure before we want to be planning to join the rally. So the retest of structure is likely going to come in the form of a retest of the $88.70 area, or probably the bullish trend line here, after which we look out for patterns on lower time frame to join the rally to the upside. So if you had missed this trade, we want to wait for breakout of the $88.70 area to happen, then a retest of that structure, looking out for confirmations to join the rally to the upside. And if you're already in this trade already and you've moved your stop loss to lock in some profits or break even at this point, then if a breakout and retest of that area happens, we want to be adding more position to our existing trade so that we can maximize the profit we have running on the US oil so far. So this is how we intend to take advantage of the US oil going into the New York session today. Then another scenario I also want to share with you here is a possible bearish momentum that could be happening. Remember, I told you how this bullish trend line is going to be our guide for this week, and if this bullish trend line is going to be our guide, so we want to continue to see price oscillate right above that bullish trend line to be comfortable in any bullish momentum here. Hold on a second. I want to bring this hold on a second. Okay. So all right, let's return. So we want to see price continue to oscillate right above that bullish trend line to be comfortable in our buy position here. So if at any point in time, remember we've moved our stop loss to break even to protect our position size or lock in some profit. So if we see price break down that bullish trend line, then that's likely going to be a bearish signal. And remember, when we see signals like this, we don't want to get too excited, as we want to wait for further confirmations to join that decline. So the confirmation is likely going to come in the form of a retest of the $88.70 area, which also shares a confluence with the bullish trend line we were able to identify earlier. So with multiple rejection of this area, or probably a reversal pattern, we might want to be joining the decline to the downside. Remember, if even if price breaks down this bearish trend line, if price breaks down this bearish trend line and we see a scenario where price climbs back above the $88.70, it's still going to be a bullish momentum. So it's still going to be a bullish setup for us to join the rally to the upside. So a rejection of the $88.70 after the breakdown of the bullish trend line is what we want to be looking for selling opportunities here on the US oil. And we need to consider that we've been on a long-term bearish momentum here. So if that happens, then the $88.70 area, which appears to have been rejected a second time, might turn out to be a double top structure, leading us into a reversal pattern that is likely going to be sending price crashing down after the breakdown of the neckline or something like this back into the descending channel we identified on the daily time frame. So this is how we intend to trade the US oil. Remember, we've moved our stop loss to break even or lock in some profit at this point so that we don't get caught up in any pull up, pull down that could happen anytime. So what we want to see is a breakout of the $88.70 area to continue to enjoy the bullish momentum. And if we see a breakdown of the bullish trend line, then a retest of that structure should be giving us a confirmation to be joining the decline. So that is how we want to trade the US oil. And if you have any questions or you need further clarification regarding what I've just discussed so far, feel free to drop in your inquiries in the comment section. I'll be taking the next 10 to 15 seconds to read through the chart to see if there are any questions whatsoever, and if there are none, we move on to the next pair. $359, good morning. How are you doing today? Glad to have you around. I from BG Generella. Okay, good morning, Generella. CG921. Hello, hi, how are you? Good morning. Okay, we have our rep in the house. Good morning to you. 704. Hi, how are you? Hey, Steamerola. Good morning. How are you doing today? Okay, happy to have you around. Okay, I'm also happy to have you too. If you have a chance, let's look at gold. Okay, I actually wanted to do gold yesterday. I have a position running on gold at the moment, so I'll pen that down and see if we will be able to treat it today. So written down already. Okay, so Farah 44. I'm just losing. Okay, well, like I used to say, you have to be patient. Trading is all about patience. Confirmations, you have to be patient and you look out for your confirmations before you open your position on this on when you trade. Okay, 359. Oh, glad to hear that you're good. 868, good morning. Glad to have you around. All right, in the absence of no questions, I guess I want to take this as a confirmation that we all understand what I've explained so far. So let's move on to the next pair. The next pair is the US tech, and the US tech is also doing very well at this point. So now we have the US tech right now, and this is the 1 hour time frame, and let's see what has been happening in the last 24 hours. Now, if we look at the current structure here, we had two parameters that were supposed to guide our action yesterday. The first one is the key level at the $12,600, which is going to be our yardstick for trading activities for this week. And then we were saying this bearish trend line we identified on the daily time frame would also be our yardstick for yesterday. So what happened afterwards? We saw a breakout of that trend line. We saw a retest to structure. In fact, we saw multiple rejection of this trend line, after which we joined the rally to the upside. So if you had joined this rally to the upside, kudos for being on standby to take advantage of that move. And right now you will definitely be in about let's say somewhere around $100 to $120 at this point in time. So the first thing I want to say here is to move your stop loss to break even or lock in some profits at this point in time. So your profits, you could lock in some profit right above the $12,720 area, because we have a structure around here. So right below the $12,720 area seems most appropriate to lock in your profit. Now, for those who are not part of this session yesterday, for the sake of these people, and so that we can all be on the same page, I would have to scale up to the daily time frame to see how we got to where we are right now. Then after which we will be looking at how we intend to trade the US tech in the New York session today. So let's go to the daily time frame here. And right on the daily time frame, the first thing we obviously observed was that price. Hold on a second, let's have a clean chart here. So I want to delete this one, and let's see. Okay, let's delete this one too as well. So the first thing we observe here on the daily time frame is that price action has been on a very strong bearish momentum, and this is evident after connecting the series of lower highs since the beginning of the year. We were able to identify this resultant bearish trend line, and in the last 3 weeks we were able to enjoy this move from the $13,500 area right into the $12,000 area, which gave us about 1,400 pips in the last 3 weeks. And what do we have here? If we zoom into the structure we have here in the last couple of months, we can see that we have price respecting a ascending channel. We saw how price fell into this ascending channel, and since then, since the month of June, we have consistently found higher highs and higher lows to give us a bullish momentum in the last 2 weeks, in the last 2 months. Now we saw a breakout which appears to be a false one. Price came back into the ascending channel. Then we saw a breakdown of the ascending channel, which resulted into multiple rejection of the key level, which also serves as our neckline at the $12,000 area, which led into a bullish momentum. So we have a neckline at the $12,000 area, and the neckline is the neckline of the reversal pattern we identified here. if let me show you what I'm talking about. We had the first touch of the demand zone at the $11,000 area. Then price came up into the neckline. Then we saw the second touch, which was a higher low, and then we witnessed the breakout of the neckline, retest of the neckline, push price to the upside. And as soon as price tested the $13,720 area in the month of August, we saw a downtrend, and price appears to have continued to the downside to into the $12,000 mark. And what did we notice around the $12,000 mark? During the course of last week trading session stroke this week, we saw how price consistently rejected this level, giving us a clue into a possible bullish momentum. And lo and behold, we were able to take advantage of this bullish move during the course of last week trading session. And from a technical standpoint, when we look at the structure here, we saw the breakdown of this ascending channel here. We saw the breakdown of this ascending channel during the later part of the month of August. And from a technical standpoint, whenever we see a breakdown of structure like this, we expect price to give us further confirmation in the form of a retest of that structure. So during the course of our live session yesterday, we were actually looking at how price is going to relate with the structure. Look at what the structure is here. You can see that the structure, we have this bearish trend line here running through. Then we have the support level of this ascended channel also. So it shows us how sensitive this area is. So we are right within the zone yesterday, and we were saying, okay, fine, we have this kind of scenario. We want to see how price is going to relate with this level to make a decision for this week. So if we are going to be seeing a breakout of that that bearish trend line, then that could be a signal for a bullish momentum where a retest of structure will give us further confirmation that price is going to probably respecting that ascending channel one more time. So now with this information we had there, the next thing we did was to scale down to the much lower time frame, which was our 1 hour time frame, where we wanted to see how participants in this market are actually relating with this level. So one thing we did on the 1 hour time frame was to identify a key level at the $12,000 area. And the reason why we have that, we can see if we go to the past, we can see how that level has been a major determinant of price action. We saw selling niche around this area. Then during the early hours of this week, we saw a breakout retest of that $12,600 area. So the $12,600 area now becomes a yardstick for us this week. So what are we saying? We said if price continues to oscillate right above this $12,600 area, we want to be looking forward to buying opportunities. And if price breaks down the $12,600 area, then we want to be looking for selling opportunities on this one. Now, what happened since the beginning of the week was this. We saw our price consolidated right between the $12,700 area and the $12,570 area. We saw a consolidation phase, giving us a clue into a possible indecision that has gripped the market, and we were waiting for a breakout of that channel to give us a confirmation of a trend continuation to the upside, or probably a breakdown to the downside to send price crashing. But what happened during the course of last week trading session? Well, we saw a breakout of that channel to the upside. We saw a breakout of the channel, and then we saw price come back to do a retest of structure to give us a confirmation to join the rally to the upside. So that is how we got to the point we are right now, and at this point we are in profit on the US tech. So with a profit running on the US tech, I told you to move your stop loss to break even or lock in some profit right above the $12,700 area. And now that we are going into the New York session today, how do we intend to take advantage of a trend continuation here? Well, for those who had missed this move right from this point, let's see if we have a second chance, if the market is going to give us a second chance to join any potential opportunity here. So the first thing we want to be doing here is to identify this bullish scenario that has been happening since last week. And what I want to be doing here is to bring out my line chart. Then we want to connect some points together to identify that trend line. So we have something like this. Let me give this a purple so that we have it more emphasized. And then I want to make it a little bit thicker to emphasize its importance for this week. So we have something like this. We can see how this trend line has been respected in the past. Okay, so we can see how. So let's go back to our candle chart. Now look at the structure we have here. We can see how price has consistently respected this trend line since the beginning of the month. We saw rejection, rejection, rejection here by the sellers. Then we saw another rejection here during the later part of last week trading session. Then we witnessed a breakout and retest of structure. Price came back to respect the structure again, respected the structure a couple of times during the New York session yesterday, and price has continued to the upside. So if how are you that you have missed this opportunity we took advantage of yesterday, how do we intend to trade this? So now the next thing we want to be doing here is to look if price is going to come back into this bullish trend line. So are we going to see price come back, do a scenario where price comes back into this bullish trend line with multiple rejection to give us a trend continuation to the upside? So that is the question we want to be looking at during this live session today. So the next thing I want to be doing, bring out my line chart. Let us identify a structure here. If we bring out our line chart now, and then we can see somewhere around the $12,740 area appears to be somewhere to reckon with. And why have I said that? I will show you in a moment. But before I do, let's label this level. So we have $12,740. Okay. So that is something we want to be looking at. So look at what we have here. Let's bring out our line chart. And the reason why I was able to identify this $12,740 is simply because we can see how this level has been a major determinant of price action in the last 24 hours. During the New York session yesterday, we saw our sellers appeared to want to push price to the downside from here, but was met with stiff resistance by the buyers, and then we witnessed a breakout of that structure, after which multiple rejection of that level continued to push price to the upside. So now going into the New York session today, are we going to see price come back one more time to retest that level? That is same price come back, which also shares a confluence with that bullish trend line we identified earlier to push price to the upside. That is one scenario we want to be looking at. So if price comes back into the $12,740 area, or also the bullish trend line here, we want to be buying this. We want to be buying the US tech. So for those who are still in this trade, this is an area we want to be adding more position to the trade. If you had missed this area to add more position to the trade, then we could likely look forward to rejection of this level to add more position to this trade. And if you are not in this trade yet, this is an area you want to be looking forward to join the rally. Now, what if price does not come back into the $12,740 area? What if price does not come back into this area? Then what do we want to be looking forward to? Well, remember we have the support level of the ascending channel on the daily time frame. Let me go to the daily time frame so that I can show you what I'm talking about before we continue from here, so that we can have a better perspective into what our expectation is going to look like. So we have this temporary bullish trend line that has been respected. You can see it's the one on your screen with a dotted black line here. We can see how that level has been respected since the month of June. So what we want to be looking forward to right now is, let's go back to the 1 hour time frame. So if price does not come back into the $12,740 area, then we want to see a breakout of that line which I just showed you on the daily time frame, this line here. So we want to see price break above this line. Then that gives us a signal that there is a bullish momentum evolving at that particular point in time. So if that happens, remember, we are not getting too excited at the sight of a signal like this. We want to wait for further confirmation to happen, probably in the form of a retest of the structure, that is this bearish trend line, or price could come back into this bullish trend line. Whatever happens, let's get prepared. What we want to be looking forward to is a reversal pattern from this point. So if a reversal pattern happens, we scale down to our lower time frame to look out for such a structure to join the rally to the upside. So it can either be a retest of this trend line, or it could come back into the bullish trend line we identified here, then we join the rally to the upside. So this is how we intend to trade a bullish position here on the US tech. Presently, I have my take profit target around the $13,100 area, and the reason why that is, I will show you. Let's scale up to the 4 hours time frame here. The reason why I have the $13,100 area is simply because of the structure. If we look at the past here, we can see we have a structure around here where sellers appears to try to push price to the downside. From there, then we have this point where buyers push price to the upside, and then we have this area where sellers push price to the downside. So there is a likelihood that if price comes into this area, we will be seeing a consolidation phase. So we want to see how price is going to relate to this level here before we know if we are going to be joining a bullish continuation or price is going to be rejecting that area to push price to the downside. So if you are going to be trading this one, so that's how we want to be doing it. And then like I said, the bullish trend line here on the 1 hour time frame is our guide for the week. If at any point we see a breakdown of that bullish trend line, please let's see that as a bearish signal. Then we want to hold on to see how price is going to relate. Probably a rejection of the $12,740 could send price back into the 12,600 area. Remember, we had this level broken during the early hours of the trading week. That is when the trading week started yesterday. We saw a breakout retest of that level. Price could likely come back into that level to push price to the upside one more time. So if we say a breakdown of that bullish trend line, we want to see that as a bearish signal, retest of structure back into the $12,600 level. So this is how we intend to trade the US tech. If you have any question regarding what I just explained so far, feel free to drop a word or two in the comment section and I will be willing to be of help. So that is that on the US tech. Any questions, please? Okay, all right. Good morning, 868. All right, 032. Good morning, aka. Good morning to you. All right, in the absence of none, let's just move on to the next pair. So the next pair we deliberated on yesterday is, what pair is that? I think it's the Euro USD. Let's see. Okay, it's the AUD USD. I think the AUD USD was introduced to us yesterday by was it Ashitaka? Yes, I think it's Ashitaka. So we attended to the AUD USD yesterday, and the AUD USD is doing very well as we've expected. So we've been having a very good turn since the beginning of the week. Now look at the structure we have here. Remember, we had the scenario yesterday, though we were late to join this rally. We saw our price did a consolidation phase during the early hours of yesterday's trading session before we saw the breakout of that structure, and then we saw a retest of this area. So we joined this rally around here yesterday. I told you to join yesterday around this point, and though we had price coming back into our entry zone again, and so if you had missed that one yesterday, you could actually have taken one. We had price come back again, and then price is going to the upside at this point. So if you are in this trade, kudos to you for being on standby to take advantage of that trade, and we will be in about how many pips in profit right now? About 33 pips in profit at this point. So the next thing I'll be saying here is to move your stop loss to break even. We don't want to get caught up in any sudden pullback at this point in time. So now that we have already moved our stop loss to break even, the next thing we want to be doing is to scale up to the daily time frame, especially for those who missed out on the session yesterday, so that they can actually have a clue into how we got to where we are at this point. So I'll move on to the daily time frame here. And what do we have on the daily time frame? On the daily time frame, we have a very strong bearish momentum here, and this is evident after connecting the bearish trend line we have here. And if we look at the bearish trend line here, I have a temporary one which is dotted line, and then I have a major one which is the pure line that you can see. Now we can see our price, as soon as price comes into this bearish trend line, we can see this impulsive move to the downside. We saw the one that started in the month of April, and if we compare that one with the one that started in the month of June, we can see that the impulsive move appears to be reducing. And if you compare that to the one that started in the month of August, we can see it actually had increased. It's even smaller than the previous one. And why is that so? We can see that the 0.685450 level has been an hindrance for the sellers. Anytime price comes into this level, we see stiff resistance by the buyers to push price to the upside. So in that regard, we were able to identify the 0.67100 area as our demand zone for the week. And we can see our price has consistently rejected that area, giving us a clue into the strength of the buyers at this point in the market. So now with the demand zone identified around this area, we saw a neckline here at the 0.6740. That was a reversal pattern, and then we wanted to see how price has been playing out. But before we do that, before we scale down to the 1 hour time frame, we have a key level that we identified yesterday that is supposed to be our guide for the week. So we have a key level right at the 0.68500 area. If you remember, we had the structure because we saw how price has been a major how this level has been a major determinant of price action. We saw one here in the month of May. Then in the month of June, we saw how this area was being a demand niche. Though we saw a breakout in the month of July, it became a resistant point. Then a breakout above this area turned this area into a demand zone multiple times right into the month of August. Then we saw a breakdown right now, and then we have witnessed a breakout of the structure in the last 2 days on this one, giving us a clue into the strength of a clue into the significance of this level. So with the level identified here, we scaled down to the 1 hour time frame, after which we wanted to look at how participants are actually relating with that key level since the beginning of this week. So we have the key level here. So we saw multiple rejection by the sellers of that key level during the course of the early session. I think the late last week's trading session stroke the early days of this week, we saw multiple rejection by the sellers with an attempt to push price to the downside, but that was met with stiff resistance. And what did we see? We saw an outright breakout of that level, which also shares a confluence with the bearish trend line we identified on the higher time frame. So we saw the breakdown, we saw a retest of that area. In fact, we saw another retest of this area. Then we joined the rally to the upside. Now, with the scenario we just have here, we painted here, how do we intend to take advantage of a trend continuation? This is especially for those who missed out on this opportunity yesterday. So let's see if the market has another opportunity. Give us a second chance to join the rally to the upside. So now the first thing I want to be doing here is to identify a structure based on what has been happening in the last 2 weeks here. So what the first thing I'll be doing is to bring out my line chart, and then let's connect these points together. I can see that we have a significant level here. We have a structure here. We saw how sellers resisted this level. Then we saw something like a breakout retest of that level here. Price came back to do a retest of this level at this point. So one thing I want to be doing is to be connecting these points together to have a key level that will be guiding our action during the New York session today. So we have something like this. So we have somewhere around the 0.68700 area. So let us label this point for the sake of clarity. So we have 0.68700 level. All right. Okay, good. So we have this area here now. So let's bring out our candle chart. Let's see if we are right on point. Okay, let me do some readjustment. So we have somewhere around this point. So we have the 0.68700 area as a key level that we want to be using as our guide going forward. Now, are we going to see price come back into this level during the New York session today? I'm not sure if this is going to happen, because we can see how engulfing candle has taken price out of this area, giving us a clue into the strength of the buyers at this point in the market. So are we going to be seeing price come back into the 0.68700 area and with the multiple rejection probably, or a reversal pattern on lower time frame to send price going to the upside? That is a big question mark. That's only what happens in the New York session can answer. That is one scenario we want to be looking forward to. Then the second scenario I was able to identify here, if we bring out our line chart, is this resistance point that was broken during the early hours of today. So we have something like this here. Let me give this, okay. So we have this resistance point. We have this bearish trend line. Hold on a second. Let me make this a little clearer for us to see. Okay. So we have this resistance point here. We have this bearish trend line that was broken. So this is a bearish, this is a bullish signal. And from this is a bullish signal here, we had a breakout of that structure. That's a bullish signal. And from a technical standpoint like this, when we see a breakout of structure like this, what do we expect? We expect price to come back and do a retest of structure to give us further confirmation to join the rally to the upside. So if price does not come back into the 0.68700 level and we cite a reversal pattern or multiple rejection of the 0.68700, sorry, the bearish trend line we identified that was broken during the early hours of today, then we want to be looking forward to patterns on lower time frame to join the rally to the upside. So if you had missed this trade yesterday, then we want to be looking forward to price coming back to either the 0.68700 level or probably retest that bearish trend line to join the rally to the upside. And for those who are already in this trade, this is another opportunity to add more position to your existing trade. So with this information here now, where will our take profit target be? Well, I've identified somewhere around the 0.700 level, which also shares a confluence with the bearish trend line we identified on the higher time frame. Let me show you again so that we can be on the same page here. So remember, we had this major bearish trend line. So what we want to be seeing is how price is going to be relating to this level. So we don't want to be too over ambitious here. So that's why we are putting our take profit target somewhere around here, somewhere around between the 0.69800 and the 0.70200 area for the meantime, because we want to see how price is going to relate to this level. Are we going to be having a rejection of this level to send price crashing to the downside, or we could be having a breakout of this level where a retest of structure will give us further confirmation to join the rally to the upside. So let's see what's going to happen when price comes into this level. I just hope price continue to move as expected on the AUD USD. So if you have any question regarding what we've just discussed so far, you can feel free as usual to drop in your inquiry in the comment section. So let's move on. We moved on to the Euro USD, where price has also been moving as expected. It appears the dollar is losing that momentum since the beginning of the week. So what do we have here on the Euro USD? Remember, I told you how I took advantage of this move yesterday. I took advantage of this move before the live session yesterday, and I told you, okay, fine. I think we were around this point yesterday, around this point, yes, around this point, around the 12, around this 1.0450 area. That's where we were during the live session yesterday, and I was telling you that since we already have a breakout of that structure, which I took advantage of, and if you had missed that move, then you want to wait for price to come back and do a retest of our key level at the 1.0100 level. And lo and behold, what happened during the New York session yesterday was remarkable. We saw multiple rejection of that level, which was the 1.0100, the key level that was supposed to be our guide for the week, and lo and behold, price continued to run to the upside here. Now, when I actually saw this during the early hours of the day, immediately I came to open my chart and I saw this kind of scenario. I identified this key level at the 1.01450 area, and I said if price breaks out that retest that level, I want to be adding more position to my existing trade. So right now I'm having like 3 positions running on this one, with my stop loss moved right below the 1.01450 level at this point. So if you're already in this trend at this point, please move your stop loss to break even, or probably lock in some profit right below the 1.01450. And remember, yesterday we had this bullish trend line identified here, and this bullish trend line is serving as our yardstick for this week. What do I mean by that? It means that it's going to be guiding our bullish activities for this week. So we don't want to see price come right down below that bullish trend line. If price does, then we know we're definitely going to be out of that trade and see how participants is going to be relating with that level. So as long as price remains right above this bullish trend line, we are very, very comfortable in this bullish position. So let's scale up to the daily time frame before we plan our trade for today, so that we can allow those who are not part of us yesterday to have a view of how we got into where we were at this point. So we have a similar scenario with what we have on the AUD USD, where we have a bearish momentum, and we can see, and as a result of that, we identified this trend line, bearish trend line, after connecting the series of lower highs. And one thing I also want to share with you here is um, the volume of the impulse leg. Anytime price rejects that bearish trend line, we saw, hold on a second, I think I didn't get that right. So we saw this move. That's the first time price respected that bearish trend line was in the month of February, and then the second time price respected it was in the month of April. We can see that this impulse leg was huge, so it was bigger than the previous one. Then the next time price tested that bearish trend line was in the month of June, and if we look at the impulse leg, you can see it's almost the same. Even I think it's a little bit more than the previous one, giving us a clue into the strength of the sellers at that particular point in time. However, if we see what happened during the first week of the month of August, we saw the bearish momentum reduced. And why was it reducing? Yeah, it's because of this 0.99100 level area, which has been a stiff resistance for sellers in this market. We can see anytime price comes into this area, it was met by buying potentials. Yeah, it was met by buyers. Here, buyers tried as much as possible to ensure that price does not break below this area. So because of this multiple rejection of this level, we were able to identify a demand zone around that area. So, and look at what happened. Anytime price comes into that demand zone, we see moves to the upside from this point. And look at what happened during the course of last trading session. We saw this engulfing candle right above, right through that demand zone, right up into this area. And now during our live session yesterday, we identified this key level at the 1.0100 area, which also shares a confluence with the bearish trend line we were able to identify here. So what we were saying during the live session yesterday, we want to see how price is going to relate with that level. How we're going to be having a breakout of that level, that is, price breaks out of that level to give us a signal of a bullish continuation to the upside, or how we're going to be seeing multiple rejection of that level to send price crashing to the downside one more time. So let's go scale down to the 1 hour time frame to see what actually happened there, and let's see what our participants are actually relating with that key level we identify at the 1.0100 area. So during the early hours of yesterday's trading session, we saw multiple rejection of that key level, lending into a consolidation phase that led into the breakout of that structure. The price came back to do a retest of structure, and price has continued to the upside from that point. So now this is how we got to the level we are right now. And if you are, like I said, the first thing we want to be doing for those who are already in this trade is to move our stop loss to either break even or somewhere right below the 1.01450 level to lock in some profit and lock in our position, protect our position, so that we don't get caught up in any sudden pullback that might be happening at this point. Remember, the Euro USD has been on a very strong bearish momentum since the beginning of the year, and we could be having any sudden bearish move from here. So because of this, we want to lock in our profit or lock in our position in that regard. So now that we are going into the New York session today, what is going to be our plans? Well, I would have said that, and if price comes into this bullish trend line, we want to be joining the rally, but price has already retested that trend line a couple of times during the early hours of today to break above the 1.01450 area to continue to rally to the upside. So if I don't know if price is going to come back into that bullish trend line again, we might want to be looking to take advantage of a trend continuation. If we see multiple rejection here, or probably a reversal pattern on your lower time frame to join the rally to the upside. Here, that is one scenario we want to be looking at. And the other scenario we want to be looking at is a breakout of the structure. So remember, we saw selling momentum right here during the New York session. I think the beginning of the New York session yesterday, we saw a multiple rejection of the 1.01900 level So we want to see how price is going to relate with this level around this point. Let's see what happens during the beginning of the New York session today. Is price going to reject that level one more time? So what I want to be doing here is to identify that level, and let's use that level for those who are not part of this trade yet. That is, if price does not come back into this area to give us an opportunity to join the rally, then a breakout of the 1.01, let me label these areas for the sake of clarity. So we have 1.01900 level here. So we have this level here right now. So what we want to be doing is to wait for price. Be patient enough to wait for price to break out of that structure. And if we sight a breakout of that structure, remember, we are not getting too excited at the sight of such a breakout. We want to wait for further confirmations to happen, which is likely going to come in the form of a retest of the structure on our lower time frame. We could see multiple rejection here or a reversal pattern to give us that confirmation to join the rally to the upside. And if price breaks back, that is, if price breaks above that 1.01900 level, and then we see price breaks down that level here, there's still a possibility that it's still a bullish momentum, as we could have price come back to do a retest of that bullish trend line, where a reversal pattern on our lower time frame could give us a confirmation of a trend continuation to the upside. So this is how we intend to trade the Euro USD for this week, for the New York session today. And remember, we have a couple of parameters to guide our actions here. The first one is the bullish trend line, the purple line on your screen. Then we have the 1.01450 level, and then we have the 1.01900 area as our yardstick for the New York session today. So we want to continue to see price rally right above the 1.01450 to be comfortable in a buy position. So that is how we want to trade the Euro USD. If you have any questions, feel free to drop your inquiries in the comment section, and I will be looking through the chat from time to time to see if we have any question. So let's take on the Ethereum USD. I'm not sure we have any major setup here on the ETH. I checked it this morning, and I really don't see something significant here. So let's see what is happening here again, and let's see if we can actually take advantage of any momentum here. So the first thing I observed here on the Ethereum here is this: on the 1 hour time frame, it appears that price is being all a bullish momentum on the 1 hour time frame. But if we look at it on a daily time frame, it's a very strong bearish momentum here. We can see after connecting the series of lower highs here, we saw this bearish trend line, and then we have the key level at the $2,000 mark, which I'm expecting that if price comes into either this area, we could either see a breakout, a retest of the structure to push a bullish momentum, or we could be seeing multiple rejection of the key level at this area, where we look out for selling momentum from this point. So those are the two scenarios I'm actually looking at on the Ethereum from a long-term perspective. However, when we scale down to the 1 hour time frame, the first thing we're going to observe here is we have structures, definitely, and we have a structure at the $1,690 area. We can see how this level has been respected since last week. We saw multiple rejections from this level. We saw selling momentum here. We saw a breakout retest of the structure, and during the course of the early hours of today, we saw a sharp rejection of this area. So if you are taking advantage of this bullish momentum from here, kudos to you for identifying that opportunity. However, if you didn't, then you want to be patient enough to wait for another opportunity to join that rally. And if that rally is going to happen, then it's likely going to happen after a breakout of this bearish trend line I was able to identify here this morning. If we see a breakout of the structure, a retest of this level, or somewhere around here, then multiple rejection could be sending price going to the upside. And if price breaks above, hold on a second, above the $1,800 area here, a retest will give us further give us another opportunity to add more position to our existing trade here on the ETH. I think with this short explanation, you'll be able to get what I'm talking about here. I think Steamroller was the one that raised Ethereum yesterday, and I hope he doesn't have any question regarding what I just explained. I hope you just understand. You understood what I just illustrated here. So he said we should do XAUUSD. Let me see if I can quickly run through the XAUUSD for you. Okay, so let's quickly look at it. I actually joined the XAUUSD somewhere around the $1,720 area yesterday. I had this scenario here. I had a breakout of the structure at the $1,720 area yesterday here, and I saw this move to the upside. We saw a breakout of the bearish trend line here. Price moved to as far as the $1,735 area, and then we saw price come back into the buy zone. I identified this buy zone again right around the key level at the $1,720 area, and I added one more position to my trade here. So I have two trades running on the gold at this point in time. So right now, if you are not in that trade, I don't know if Steamroller is in that trade anyway, but if you are not in that trade, one thing I'll be saying here, I also have another level right at the $1,728 level area here, which appears to have been broken at this point. So what I will be suggesting is that let's say you could actually join from here above the $1,728 level, where your stop loss will be right below this area. I don't know if you can afford to have a stop loss as huge as let me see how many pips that is, like 1,000 pips. I'm not sure if you can afford that, but if you can't, then we want to wait for this candle to close. Then if we see another rejection of this $1,728 level, then you could actually join the rally with your stop loss right below the $1,724 area. So this is how I intend to continue trading the XAUUSD. But before I close on this one, I think I can identify another structure we can use as our guide. As if we bring up my line chart here and connect the series of higher lows, we can see that we have a structure right around here. Let me thicken this a little bit to emphasize its importance. And then we have this purple. We'll have it purple. So let's bring out our candle chart and let's see if we could have some adjustment. All right. Okay, I think it's good. So if price comes back to retest that bullish trend line, then we want to be joining the rally from that point. So the potential on the XAUUSD for the week is also very, very bullish. So look out for bullish momentum here in the form of a reversal pattern if price comes into either the bullish trend line or the $1,728 level, or probably come into the buy zone around the $1,720 area. So as long as price is right above that bullish trend line, I think it is comfortable to be in a buy position on the. All right, so that is that on the gold. Is Steamroller still in the house? If you have questions, feel free to ask your questions while I quickly do a recap of what we have explained so far today. So the first pair we looked at today was the US oil. And what was our expectation on the US oil? We were actually expecting a bullish momentum, and we have a couple of parameters to guide our action for the week. And we have this purple bullish trend line, which we said we want to continue to see price oscillate right above that bullish trend line for us to be comfortable in our buy position. And since yesterday we've been profitable on this one, and I told you the first thing that I told you here is to move your stop loss to break even or lock in some profit right above the $87.50 area. And for those who missed out on this opportunity we took advantage of yesterday, I told you guys to be patient enough to wait for a breakout retest of the $88.70 area, where we were going to look out for another opportunity to join the rally to the upside. And if you are already in this trade, you want to be adding more position at a breakout retest of that structure. Then we went on to talk about the US tick, which is also in profit at this point in time. And the first thing I said here is to move your stop loss to break even. And then I was able to identify parameters that will be guiding our action during the New York session today. And I also try to find a second chance for those who missed out on the opportunity we took advantage of yesterday, and because of that we were able to identify the $12,740 area, the bullish trend line here as well. So what we were saying is that we actually have two scenarios here. The first one is if price comes back to either the $12,740 level or probably the bullish trend line here with multiple rejection, then we want to be joining the rally to the upside. But what if price does not come back into this zone, that is the 12,740 and the bullish trend line? Well, I shared with you this trend line we identified on the daily time frame, this dotted line here. I said, okay, fine, if that does not happen, then a breakout of this trend line here will give us a signal. Remember, we are not getting too excited at sight of such a signal because we want to wait for further confirmation to happen, and that will definitely be in form of a retest of either the structure or this bullish trend line at any point in time to join the rally to the upside. So that's how we intend to trade the US tech. Then we went on to talk about the AUD USD, which is also a profitable trade for us since yesterday. And the first thing I said is to move your stop loss to break even at this point. Move your stop loss to break even. And one thing we want to be looking forward to for those who had missed out on this trade is a retest of this structure here. Remember, we had this bearish trend line here which was broken during the early hours of today. So I'm expecting that if we see price come back into either this bearish trend line here or probably the 0.68700 area, we want to look out for patterns on lower time frame to join the trend continuation to the upside on the AUD USD. Then we went on to talk about the Euro USD, where we also have a very positive situation here. We have a couple of parameters guiding our action. We have the bullish trend line here, the purple line we can see on our screen. Then we have the 1.01450 area, which has already been broken during the early hours of today. And like I told you, I have multiple positions running on this one with my stop loss moved to somewhere right below the 1.01450 area to protect my position against any sudden pullback that is likely to happen on this pair. So for those who actually missed this move yesterday, I think we also have another opportunity in the form of a either price comes back to do a retest of the 1.101450 level or this bullish trend line with patterns on lower time frame support a trend continuation to the upside, or we could have an outright breakout of the 1.01900 level. Remember, this level has been a selling niche. In the past, we had a rejection here during the New York session yesterday. So we want to see how price is going to relate with this level. If we have a breakout of that structure, then a retest of that level will give us further confirmation to join the rally to the upside. So that's how we intend to trade the Euro USD. Then we went on to talk about the Ethereum, where we I told you I was able to identify another structure here at the $1,690 area after connecting this significant level together, and we had another opportunity to join the rally from here. So if you had missed this, and let's wait to see if we are going to be having a breakout of this bearish trend line. So if we have a breakout of this bearish trend line, what we want to be looking forward to is a retest of structure to join the rally to the upside. And like I said, if we finally have a breakout of the $1,800 level like this, then a retest of structure will give us further confirmation to add more position to our existing trade on the Ethereum. So let's see how this plays out in the next 24 hours, and we shall come back here tomorrow to give an update in that regard. Then we close the day with a very short summary of what is happening on the XAUSD. I was not able to give you a long-term view on this one because of my time. Now on the XAUSD, we have this bullish trend line. So let's allow this bullish trend line to guide our action going forward. Like I told you, I already have two positions running here. I took this move yesterday and price came back again into my entry zone here, and I added another position to this one. So what I did now is that I identify another level at the $1,728 level, and this is as a result of how the structure has played out in the past. We can see how this area has been a selling niche at one point in time, and then if a breakout of that level happen, we want to buy a retest of that structure. So if price comes back into this level or this bullish trend line we look out for patterns on lower time frame to join the rally to the upside. So this is how we intend to trade the XAU USD. And if price does not come back into the $1,720 level, I think we still have a structure right around the $1,735 area, which has been a selling niche during the New York session yesterday. So if we have a breakout of that area, that is, price breaks out of that area, retest also will give us an opportunity to add more position or join the rally if we are not yet in that trade. So this is what we are looking forward to for the week. We were able to do how many? 1, 2, 3, 4, 5, 6 pairs. So we have like 6 opportunities for us to take advantage of during the New York session today. So on this note, I think I would have to call it a day. And my advice for you is, as usual, remember, don't get too excited. Remember, it's very, very important. Don't get too excited when you sight a signal like this. Whenever you sight a signal in form of a bullish engulfing candle or a bearish engulfing candle or a breakout of structure, please hold on and let the market give you a confirmation that price is actually going in that direction. And this confirmation is likely going to come in the form of a retest of structure, that is retest of whatever consolidation phase that has happened. Then you want to be joining the rally to the upside or the decline to the downside. And if the confirmation does not come in form of a retest, please and please, you can just pass that trade. There are quite a lot of opportunities in the market to take advantage of. So on this note, I want to wish you best of luck during the New York session. Try as much as possible to be on standby to take advantage of any potential opportunity that we have identified. I'm very sure we are well equipped, as I was able to present to you different scenarios that could likely happen. And if this happens, please and please don't hesitate to take advantage of that move. So on this note, I want to wish you best of luck and do have a wonderful day. Bye bye.